Why do I feel like it's so zoomed in? I don't know. Maybe I'm tripping. Maybe it sounds like it's a little bit more zoomed in than usual. I don't know. Am I tripping? Doesn't matter. Okay, maybe that's better. Let's figure this whole thing out. Oh, some people join. I'm gonna mute myself while I snack a If you're watching the replay, I'll be sure to put in the timestamp where I actually start talking. Sorry. All right. If you are not here by now, then go ahead and watch the replay. So I'm just going to kind of go through what I'm thinking of, and also like what all in all could be going on. So if we were to recap last week, I want to say last week I talked about a few trades. I don't remember which ones because, like, oh my goodness, we just kind of went through a lot. But maybe I could pull it up real quick. Let's see if I can pull it up. I'll mute myself just in case it mirrors. Got it. Figured it out. We went long gold. We talked about gold off the pullback. Yep, here it is. Let's show it out real quick. Blow it up. So let's like take a minute to, I guess, recap. I'm gonna recap what we talked about in a way. Timestamp about 10 p.m. basically, or 10 minutes into the stream when we really start talking. So I said, hey, we were talking about gold last week. So this is Friday, Thursday, Wednesday, Tuesday, Monday. I think futures opened up and gold was already moving really, really well. I was saying like, hey, like, prior to this, in a way, we could probably go see what ends up like what looks great, like what looks great in the longer run. So last week, we're going to quickly recap what we talked about last week, and get into what happened also last week, and then get into what could possibly happen this week and what we got to look out for. So last week, I came on here and we talked about gold. We had this whole plan that was supposed to be short term. You know what I mean? This shorter term position here, this other term position, and then this whole position. To be able to potentially capture a good move over a long period of time. And that was essentially the idea. So futures opened up. I said, hey, maybe we get a little J curve kind of thing going on, like, right, where like it comes down, comes down into this like J thing and steps its way into do like a Nike swoosh, you know? Like a little Nike swoosh. And that's what it was looking like. And that Monday morning, we gapped up, we priced well, we pushed. I said, all right, let's do it. We got in there. The managed risk line was here. We did the same exact trade. Like, you know what I mean? Like, we basically played it out exactly to the T as to how we planned it before. You know, like, and that's honestly the awesome part about it. Like, we played it exactly to the T as to how we really wanted it to go. A lot of open interest was getting in. I'm mentioning to the team, like to you all, like, hey, there's a lot of sweeps also following suit here, right? Like, this was the play, as we could see. All right, cool. We gapped up. We had good price movement in that day. We're trading at 378. And then by the following day, as you can see here now, we ended up trading into 380, hit the first price target, trim. Great. We still have an open position. We're still pushing. Following day, hit second PT, trim again aggressively, right? Like, bang, bang. We hit PT2 on the 11th. Like, it was really easy in that way. And then we started to see like a market-wide sell-off by about Thursday. Like, the whole market started selling off a little bit, and you started to see it affect gold and silver. So I'm saying to myself, like, all right, well, you know, if the safe haven assets are starting to sell off as well, you know, maybe this market-wide sell is not really going to be too great, and we need to relax. And effectively, that's what happened, kind of, where we started retracing fully. We found our way back into basically the entry point. It's not ideally like what I'd like to see, but I figured, like, hey, if we're going to continue to push down, and this goes to like a more intraday period in some way, shape, or form. If we're going to continue to push down like this, I'm good. We broke that push down, and I'm like, yeah, I'm out. In this case, it just so happened to work, and we're basically right back at our entry at the managed risk clear line. Like, we're quite literally sitting on the managed risk clear line right now, even as of today's close, as of right now at 6. So I'm like, yeah, not too much of a fan of this right here. But we hit PT 1, 2, and 3. Technically, we didn't really get to play PT 1 just simply because it gapped up before that. So 2 and 3 came super quickly, and I'm grateful for that. And I was able to lock in great profits, and was able to move on. So that's pretty much it. Like, risk management, lock in profits, move on. Now, if I were to take that same approach and maybe apply it to some other names that we were looking at too, we're looking at WDC and some of the chip names, like, same thing. That Friday, we gapped up. Oh, cool, already? Play live? Boom. Play live hit PT1, trim. It didn't play out the way we wanted it to. It didn't follow exactly on path. But we trimmed so much, it was hard to see the rejection. We pushed into managed risk here, cut the position. What did I say? Don't like. I held the position a little bit further into this like don't like line, 167, to see if there maybe was going to be a balance to get back into PT1 and then potentially push higher. But we didn't. After that don't like, I sold the rest of them. Boom, out. I'll find you another day. I'll find you another day when you want to move properly. You know what I mean? Similarly with STX. STX seems to be moving well, but not quite. It definitely pushed back. It seems like we're on path here for what it wants to do, but I just wasn't really too much of a fan, especially seeing SDX or WDC do its own thing, SanDisk doing the similar things, Micron doing the similar thing. Like, they all kind of wanted to just they all kind of wanted to just come back. But like recapping, last week's trade, the DRAM cycle had a nice pullback. But that Thursday, Friday, we kind of bought back up. If you look at the weekly, I mean, we closed higher on the weekly Micron. Not much on SDX. Okay, we didn't close higher there. Not much on SanDisk, but we did close higher there nonetheless. Right? What else? And in WC, we definitely probably didn't close higher. Exactly. It didn't. So that DRAM cycle took a little bit of a hit. They weren't liking it too tough. Wasn't going good. A lot of these risk on assets as a whole were not doing well. Like, because a lot of it, as you all know, is tied to the AI cycle. And then last week, we saw the whole AI bubble question mark come into play, right? Like, it's like let's continue to recap what happened last week now. So we saw the plays. Gold went really well. I think it hit PT2, as I mentioned. Cool. Before deciding to break down and not do too well. Gold did well. Got a cool trade out of it. Is this gap above the 137? 130, yeah. Well, no, 187, sorry. It didn't do too well there. It is what it is. Cool. We hit multiple PTs. This one I ended up like something I've learned with gold is that it trends really, really well. So if we bullishly break out and then within that week range we start to push back, it's not really going to trend. It's not really going to trend. What's up, man? Welcome. Let's do it. So with gold, I personally have a tighter stop loss, but multiple PTs were hit in this one. Great trade, nonetheless. Anyways, I continue. What's QQ looking like? QQQ. Sure, let's get right into it. I mean, Q's is a story, man. It's a story. It wants to run. It wants to pull back. It wants to run. To be honest with you, I'm watching Gex flow just to see how to trade around it on an intraday basis, but it doesn't look great per se, right? Like, so this is all tied into the narrative of the whole AI bubble thing. So let's get into it. So like last week, let's try and find it real quick. Or week before last. So Sam Altman gets on an interview with, I think, who is like this guy named Brad Gerstner, right? And basically says, hey, we're running at $13 billion in revenue, but we're on pace for like multiple $100 billion in a way. Everybody's like, oh, how are they gonna deal with $140 billion in like expense commitments? They got the circle. They got the sorry, not circle. They got the what do they call them? They've got the commitments between Oracle and then the other commitment. Deal here. You hear deal here. You hear deal here. Right? Like, where are they gonna make this money? Cool. Sam saying that hey, they're basically on pace to be able to bring in $100 billion in revenues. It's not like these spend commitments are commitments that are going to be done. Like, they're not planning on spending that money next year. These are CapEx spends, right? These are spends that are trickled out in a way. So the cash flow doesn't necessarily matter all too much in terms of the spend. And I guess this is my anti-bubble case, right? Let me explain that, right? They said that they got, I think it was 140 billion that they committed to Oracle, another 40 billion here, another 50 billion here, XYZ. Where's the money going to come from? Well, the money's probably going to come from, there's many things that I don't think the media is also covering. These commitments on the dollar amount, and the same thing with NVIDIA. Like, oh my gosh, how is NVIDIA like investing into all these different companies? NVIDIA has hundreds of millions of dollars, if not like at least a few billion in like cash flow. Like they're making, the operations of the business is just spewing off so much cash that if they did not invest in these things, they would just be sitting cash hoarding, like hoarding in a way that's worse than what Google's hoarded when in like the early 2000s. So in the same way, NVIDIA is investing in all these different companies, robotics here, they bought into this company, they put a stake into this company, they did that, is the same way Google invested into moonshot businesses like Project Loom, where they wanted to try and put internet in the stratosphere via like hot air balloons, and Waymo in its beginning years that has now given us basically a form of self-driving taxi. What else? Like deep projects that are these moonshot projects that needed that base of cash flow to be able to sustain its actual ability to grow, right? So this isn't anything new. It's just that instead of NVIDIA itself funding it and having those companies inside underneath the NVIDIA fold, it is external companies that are trusted and believed in to then go get that capital, to then go continue to grow upon those things. Why? Because them growing robotics will only push AI further. The same AI that may be used for, you know, capacity and or augmented reality, that's also going to be helped. Because why? It's all going to come back to the use of their chips, right? So that in a way is kind of the same scenario with OpenAI as well, where it's like, hey, we actually do need to invest in Oracle to have these databases and to do these things, right? And the money committed, we don't know the deal that the money is committed to. 140 billion to Oracle, maybe Oracle's going to foot half the bill, right? And Oracle has way more cash flows right now than OpenAI. We also heard recently that in the Michael Burry short, he says like, companies like Oracle are actually cooking the books because they're saying that the depreciation schedule. So this is basically how it works, right? When they're reporting earnings, what they have to do is with these big fixed assets, such as data centers and these big amount of spend on chips, they put it to CapEx, but each and every quarter, each and every year, they have a depreciation schedule, right? So basically, if they say, if I go out and I say I'm going to spend, oh gosh, wrong thing. Oracle's gonna, that's Circle. Oh my gosh, Oracle. What is their ticker? ORCL. Cool. Let's look at them on the weekly basis. All right, bet. They're basically giving back all their gains from that announcement, but whatever, right? So let's say they're going to come out and their market cap 635 billion, as you can see, maybe here, maybe not. I don't know if you can see, probably not. But like over here, 635 billion market cap. Cool. That's where they're at, right? So let's say they're going to spend 100 billion on, let me get a bit bigger as well. They're gonna spend 100 billion on these long-term CapEx spend, right? And if we were to actually put it up in sheets, maybe sheets probably be better if I just show you like so. Right, let me see. Y'all see that? Cool. So Oracle's talking about 100 billion, right? Nope, that's 100 million. Dang, there's so many zeros in that thing. Cool. 100 billion in CapEx spend, right? And then basically they say, hey, every quarter, right? Each quarter that comes through. So let's say quarter 1 of 2025, quarter 2 of 2025, quarter 3 of 2025, right? And so on and so forth. they have to go ahead and that's not gonna work. Okay, 4/1 of 2026. Sheesh, bro. They're gonna go ahead and depreciate that out. What that means is that does not work. Whatever. Anyways, cool. Basically, what that means is they're gonna go ahead and they're gonna say, "Hey, cool, boom. We expect the useful life of these chips that we're gonna spend this 100 billion in, and all of the technology and other pieces that come together in it. They're going to. They said the useful life of this technology, like Google TPUs and TPUs spend is roughly 7 years." Right? So if they split that 100 billion, let's just make it even easier. If they split this 100 billion divided by the 7 years, that means that each year they're spending 14 billion in the usage of the TPU's useful life in the way that it gets expensed out, because you could buy a computer today and it lasts you for multiple years because that is still working, right? If I were to then adjust that to say 20 years, if we were somehow able to make chips so amazing that they last 20 years, then obviously that's a much smaller expense because you're spreading it over, again, its useful life. Now you got Google's head of I think a CTO position saying like, "Hey, our TPUs are actually doing really well, and they're currently running at 100% capacity, and we're on year 8." Meaning essentially the quality and the speed and the compute is still at 100% capacity on year 8. So if Oracle comes out and they say, "Hey, we're spreading it across 7 years of useful life, this is our expense," and someone comes through and they say, "Oh, actually, it's really a 5-year useful life," right? Which is basically what Burry's trying to estimate, 5 years of useful life, that in some ways, shapes, or form, we need to depreciate more. We need to book more of an expense on our current month or on our current quarterly positioning. That way, so this divided by 4, right? We need to book this expense more. Which is basically what it's trying to say. Jesus, spread. That's basically what they're trying to say. Like, hey, we need to book this expense more because it's over a shorter period of time, over a shorter useful life. But now if I come here, look, if I come here and I break it down, so it really comes down to technological understanding. And I think Michael Burry put a shorter time frame of the useful life, saying that, hey, we're going to probably upgrade these chips again or upgrade these chips again in the next 5 years. That unfortunately, it doesn't really find its way into reality, because they're saying that, hey, Oracle's trying to cook the books by saying that they're going to have 7 years of useful life, basically meaning that per quarter they depreciate out the useful life of these GPUs and these TPUs at a lower number than what will actually occur. That's basically what he's trying to say. Whether he is right or not doesn't quite seem so, because saying 5 years on the use, I don't know. Especially when you have other CTOs or really technically inclined individuals like Google CTO saying like, hey, we're at 8 years on our chips and we're still running at 100% capacity. So again, this kind of gets to where, finance and technological inclination and understanding gets into play and says like, hey, Oracle's earnings look good, but they actually are not that good because they're just depreciating at a more expanded period than what he believes should be the correct period, essentially. And that's what made this whole thing go into such an awry where everybody's like, oh my gosh, it's overvalued, it's this, that, and the other, it's rada, and I don't really I see it in a way, right? I'm not saying that valuations don't need to come down. They definitely do. They definitely do. But I'm also not saying that this is the bubble where, right, where like if we go to 98 or sorry, like yeah, 98 in what this is, where all the air came out, like we're talking about from a peak down 70+%, odds are low, in my opinion, in my humble 2-cent opinion from somebody who's been following the market for what, 8 years now, 7 years now, religiously. I get it. I don't maybe have like as much experience as some people who's been in the game 30, 40 years, but I don't really think this is the top. And if it is, well, I'm wrong. So it just seems like we have so much more tailwinds that we can utilize to continue to propel us higher, right? We still have rates that are potentially coming down. Now, here's the other part. We're also going to get jobs data now. Now the government is opening, because I think that was also a big difference between last week and this week. Government's reopened. We're going to start getting some new data. We're going to start getting a new data. Let's check the new data. Got some charts. I think some people were saying that we should probably be able to get jobs data, or sorry, CPI data sometime. I want to say next week, like this coming up week. You're also getting a bit of some minutes too from the last Fed meeting. Those are very, very notable macro point of views that are coming down the pipeline here. As well as obviously in the video's earnings, which I think is Thursday. I think it's Thursday. I'm not entirely sure. Don't quote me on that, but yeah. Got notable investor days too. Apparently, investor day for Oracle's coming up. Oracle's hosting an annual meeting amidst the criticism of like the lawsuits and cloud security handling and some other pieces. So I guess that'll also be kind of cool. It looks like the CDs, like the credit defaults, basically the debt of these companies like CoreWeave and here we go. Boom. Here's the debts. Like it's not looking, hey, what's up? The debt's not looking too good. Oracle's debt high, CoreWeave very high, SoftBank, AMD, Intel, Amazon. Some of these companies with the cloud side of things not looking too good. And at the end of that list, we have Google. Google said that, Buffett just bought. For all we know, Google may probably open gapped up. But we've been talking about Google for a minute. If anything, Buffett late to me. That makes me feel good in a way, right? Like we're over here buying Google at like $15 price to earnings ratio, or 15 price to earnings ratio, like 160, 150s. And I guess somewhere in this range, Buffett's buying Google at 220, 230, right? So like, interesting. I don't mind. It feels good to see, like, as you can see a little bit here, a little bit closer. That was the possible path of price, where I showed and I was talking about Google being very undervalued. And then we're also hearing, not only is Google's AI strategy working directly for them in Gemini and their actual application to like Google like workforce, whatever they call it, basically like their Gmail suite for businesses. But I'm also under the impression that Apple's looking to seemingly outsource their AI efforts to Google the same way they outsource search. So, I mean, shoot, maybe I'm wilding, but 2x on Google from here? Like, does Google find its way to be a $5 trillion plus company? Well, I guess not 5 trillion, maybe. So I'm seeing Google's currently at 3.3 trillion right now. So maybe 2x is a little wild, but I mean, like, hey, 2x over a certain period of time sounds possible to me. Like if you were to put your investor cap on and say like who's going to probably really win in at least the first real stints in the public markets of AI, in terms of how it trickled down from the NVIDIA into now the capital into the application layers and so on. Like Anthropic's private, OpenAI still private. A lot of these companies private. Quen's model, Alibaba connected. There's always going to be a Chinese discount on the Alibaba. If you ask me, Alibaba's undervalued like ever, man, and it will almost always be undervalued simply because there's going to be a Chinese discount. So, like, yeah, exactly. That'd be possible. Google could probably be a $6 trillion company, right? And as you extend out that time period and you say to yourself, like, oh, in a year, will it be a $6 trillion company? Probably not. You're pushing it. In 5 years, it starts to seem possible. Especially if AI actually takes off the way that they're saying it will, right? Like, because for example, I don't think in the current price, any of this is factoring into the fact that Apple is planning to probably work with Google as their main AI application source, right? So then, like, how much money is Google going to get off that deal? You know, like just off that news breaking, Google's going to go up 5%. Just off that news breaking. And then when they start to see the revenues trickle in, because trust me, the whole question at first was, oh my gosh, search is going to get destroyed, whatever, right? Like the same thing that I went back to before when I was mentioning to you all, like Google has the cash to do all these moonshot projects that may similar to how NVIDIA now has all this cash to do all these external moonshot projects, but they're turning into cash flow soon. Waymo used to only be in Cali, and now I see them driving around New York. Why? Because they're probably going to start doing taxi level things right? And then that asset that sunken cost of CapEx of them learning and getting better with autonomous driving is going to turn into revenue out of nowhere. All while they're going to capture AI on top of that. Honestly, yeah. If you ask me, if you just want a single bet in the entire market, just buy Google and sit back and relax. Buy Google, sit back and relax. You don't gotta buy nothing else. I'm dragging it maybe a little bit, but like the story's just too fairy tale right now. Like I'm sitting here trying to find a way to poke a hole in it. Like it just makes too much sense. They're gonna get the Apple money. Waymo's gonna turn up. Waymo's also gonna turn up off the back of Tesla Auto, like off the back of Xpeng Auto, right? Like, come on. Like, and then that's not even to account for the potential growth in cloud too, that they're already doing as more external competitors try to step into play, spend more in compute and cloud. And then what about Intel in the AI context? Intel in the AI context to me is still very behind. Like, it's still very behind because for this mere fact that like they're competing with NVIDIA. Like NVIDIA has the moat, that NVIDIA is there, and like they're working together. They're trying to build certain things together. I see currently that this upside is the whole like Biden administration upside, right? This is the whole like, oh, the US government owns the state, right? That's what created that increase. I would like to see what their team is trying to put together before I can kind of say, like, for example, like I know what Google's putting together to try to place and put things together. I don't really know what Intel is trying to put together. Like, let's try and take a look. Like how do they plan on positioning themselves, right? See, the very first thing is you look into is Trump administration. Like it seems like they have money. They have money now, right? Obviously, because of the stake, because of like what they're doing. But let's see what happens here. Google invests another 40 billion into the data centers over the next. That's also what I'm going to talk about for sure. To support it, Google, in terms like how does this affect other winners? Like, I think Intel finds its way somewhere in this, but I don't think they come out as a top winner. So NVIDIA plans on investing $5 billion in Intel, giving it roughly 4% of the company, but to do what? You know what I mean? Like, to do foundry stuff, like, that's the part that I don't understand yet in the Intel story, right? Like, the Intel story to me is interesting, how it could be an inflection point for the company, right? Company that was on top of the world because they were partnered with Apple and they were doing all of the Apple chips and XYZ, but then they didn't really innovate, and then Apple found a way to get rid of Intel, and then like what they do, and then now they need to reboot, right? So now they're getting a ton of cash to potentially reboot, but I don't know what they're going to do with that reboot yet. That's probably the part where I'm a bit lackadaisical on, or maybe not in the know of. So right now, like, this current push up, this 40-50% is all like Trump administration ownership stuff. 60% basically off these lows. It's great. It's a great start. I just would watch it very, very closely to see like what actual deals come down the pipeline. Like, are they going to do foundry work? Because I do know that they do have a foundry with NVIDIA, maybe, like, to provide that context. Or are they going to, figure out a way to start selling to China? Are they going to be the ones that are able to sell to China directly because they are? Ooh, interesting. Okay. NVIDIA right now can't sell to China, right? And then I remember, like, a few months ago, they heard there was the whole, like, 15% of the top line revenue to chips sold to China or external countries will have to go to the US government. Maybe the play could be, and I'm just spitballing here, I have no idea, right? Like, I'm not in the board meetings or anything, but like, maybe the play could be Intel's the main one that gets the exclusive license to be able to sell to China. I don't know. Speculation. But I'd wait to see more information, really, to come out from that. Merck saw some really good flow. I'm not too big into the pharmaceutical companies, but I like this one a little bit, and that was nice. That's the name I'm watching. Big Bear is kind of cool, but it's very volatile, especially right now. As soon as the market takes a little bit of a lick, it's gonna drop. It's gonna drop bad. So right now, with some volatility up in the air, we had the VIX shoot up like crazy this week. It's definitely come down a lot, but these were names. Like, once the VIX and the VVIX start going crazy, and I'm like pinging it out to the rest of the gang, I'm done trading individual names because they're just going to be weak. They're just going to be weak. And I'm going to lock in on QQQ, and I'm just going to probably trade around it with like a day to day and a half time frame period or point of view in my book, kind of, because it's gonna be so hard to figure out. Like, you can go look. I think in those moments it's good to go see and just look at your watch list and see, oh, futures are open. I always forget what time they open, but this looks good. QQQ's up 30 basis points so far. S&P up 18 basis points so far. That's all right. The question is, will it stick? Gold holding 4,000 an ounce, up 26 basis points. Bitcoin is continuing to take a crap. It's crazy to see as 94K. But then again, you have to remember, like, hey, we've seen it do crazier stuff, like, to be off the highs, what, like 22 to 24%? This ain't nothing new. Bitcoin always, you know what I mean? Look at the highs of what is this? 2021. Obviously, a much different macro point of view, but like, bro, 76%, that was calm. That was a regular pullback. This one right here, boom, we seen 50%, calm. Bitcoin can cut in half, and it will not care. It doesn't care to. Even this half, which was earlier this year, right? We pushed down into 30%, right? Like 30% pullbacks ain't nothing, bro. This is regular stuff right now. It's a bigger question mark because the asset's bigger. We're sitting at 1.8 trillion in market cap, right? Bitcoin just went negative on the year, basically. That's another thing to put into consideration and kind of like, that's wonky. That kind of sucks to be flat on the year. But I mean, hey, it's what it is. It'll just be one of those years, you know? And if you're in the longer term game, it's has a great run. So if you're in the longer term game, you actually want this pullback. So you can buy more. You think I don't want to buy more at 80K? Who doesn't want to buy more Bitcoin at 80K? After just crying, like, think about it like this, right? Earlier this year, we were crying for 100K. We're like, oh my gosh, we need 100K, we need 100K, right? Making a big old deal about it. We get into 180K, pushing to 120, pushing to 125. You think I'm going to keep buying up here? You think I'm going to Michael Saylor my way into this and go debt, hold, and then buy? No. I want to see a nice pullback so I can sink more cash into it. Markets are constructive. They go up, they go down. Like, please do not forget that. Like, this is not buy up forever, up forever. Don't let this last few years fool y'all. Buy up forever. No, market cycles are a thing. And if you read history, you will see that. So yeah, I mean, I guess right now it looks like futures are looking good. So let's look at the Qs. I think I'm like lightly short on Qs going into Monday tomorrow. I do also have some longs in the market as well that could possibly offset that if we do open up well in markets, then my short will be covered because I'm very light short. But if I was right and we did gap down short, that would have covered well over the gains, or the gains would have covered well over the losses on the being long. So that's kind of how I hedged myself going into this Monday, because I had literally zero clue as to how we were going to open, especially with such a violent Friday morning and then a big push up. And then like, bro, the market's been wild, man. Market's been truly wild. I've just been watching levels, see how those levels hold. They don't hold, I'm short. These buy level, these levels hold, right? As we see here, they held. Basically, it gapped down. We came and wicked into this area. What happened last time we wicked into this area? History says we go back into like 608, 609, and then we end up probably gapping into like 620s. Cool. Like, you know what I mean? So let's figure that out. Let's maybe drop a little play here to see if we hold. So futures right now are saying we're up 30 basis points, but that really means nothing to me because we could very well easily lose 30 basis points. That's nothing like super meaningful to say like, oh yeah, we're probably going to open super green tomorrow. But let's figure this out. We're going to pick a double-sided trade real quick. I got this alert here. Let's delete that. Boom. Let's delete this. Yep. Delete this. Let's delete that. All right, so boom. Let's see where we're at. We closed right here at 608.86. Let's draw a neutral line. Neutral line. 608.86 is the neutral line. That's where we closed. Cool. Knock that one. So let's see. Last time we closed at 608, or roughly 608. We gapped. We didn't really close it. We closed above it in this case, whatever. But we had a sideways day. Okay. We had a regular sideways day as well. Like this candle right here looks like sideways. So based on that, we're looking 2 out of 4. 50-50 ball game. Still don't know what's happening. So I really need to just see what happens in the market tomorrow morning. Like how we start off, how we maybe shift. Because right now, it's not looking too good. I guess probably a good thing we could do is probably see like how individual names are doing in tech, right? Like how's Mag 7 doing? Is NVIDIA going to open up strong like how it did? We had a great. Oh, I mean, actually, I'll break down my NVIDIA trade, and we can go from there. And also, if you are not in my Discord, feel free to basically come in and join. I will drop the link in the chat. That way, you guys all can just quickly get access to the my longer form research, as well as my Discord, my personal Discord server, where I post my other research findings as well. But I basically said, hey, let me try and figure it out. Boom. I shorted the video November 11th. Used GEX in a way to find where the put majors were, put minors were. All data points that I share within my Discord for you all to have deeper context as to where actual money is, right? We go from there. So I started to see a ton of short dated puts. 1,000,007, 1,000,002, 1,000,002. Like, whoa, something looks weird. Like something's going on. No idea what actually is going on here, but I'm willing to put my money where my mouth is. November 11th, a minute before close, I let the whole team know we got puts. Following morning, NVIDIA dropped $3. Puts were live, puts were active. It was beautiful. So if we were to potentially see, let me see. Where's my chart here? Do I have it on here? Dang, okay. So I guess this is a part. This was the original short, right? The original short was from 194. And I was like, all right, I think it's going to drop, and it's going to drop into the trend line, right? And we did drop. We dropped well and deep into the trend line. The 194, because I was holding it on the 11th. The 11th here, right? The 11th, and then the Tuesday, we basically pushed up. I held it a little bit. I was like, all right, cool. We didn't really like break too low. And then boom, we sell and we cracked down even further into the line. I was like, oh, this is lovely. Like we really sold off here. We really sold off. And then we held into the line. I'm like, well, I trimmed the shorter date risk. And then I said, well, I mean, I would like to continue to see this go a little bit lower. It seemed like the sentiment was saying that as well in the QQQs and the whole Oracle thing, and then the whole debt thing, the whole thing I explained at minute 25, 30 or whatever, this live stream. But then, I was like, all right, cool. Like I'm willing to go short. And ultimately I feel like I'll target here and I'll target even down here. We didn't get to 180 flat, but like, look at where we were, bro. Like all levels that price continuously shows that is important to be. It's important to be here. It's important to be here, right? Like it's a real level with a lot of buyers sitting there waiting to be support. Here, 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 multiple times here too, actually. So like this super shows it. You know what I mean? That's why I put a PT there and I'm like, all right, 180 will probably be like the low-ish if we really, really get there. So I traded the NVIDIA puts like twice in 2 different ways. The original push down into the trend line, and then and then I traded a little bit shorter dated risk into the break of the trend line to see if we can push down into this flat level and then see, like, look, even if I extend it out even further, come on, this level is massive. It is a massive level of true resistance and support. Like, of course it was going to do something and magnetize towards that lane. Like, you see it time and time again, and then once you start to see it so many times, you just take the position and move on. You don't even like question it anymore because the risk is already managed, the risk is defined, and you just move on with it. You know, so that was basically the NVIDIA trade for the shorter term that I put together. I was like, hey, not only is it falling, it's starting to diverge because QQQ had a really good bullish day one day, but NVIDIA continued to keep on falling. It kind of like I'm walking through the whole team, walking through like this is what's happening. NVIDIA starts moving well. We're moving in the great direction. We continue to fall through. We continue to fall, and I'm like, all right, cool. This is me taking the video short again 2 days later. Like I already trimmed the first calls that I had, but now I'm looking to get some other ones to see if we could get even lower into that 180 zone that I just marked out. I'm like, all right, cool, let's do it. We're live. We're taking it to 182.50, 180, and then maybe 170. Like the 170 was like a runner, if possible, if this thing really starts to go crazy. Came through, touched PT1, wicked up, didn't get to 180. It's ultimately what we saw. And it was awesome. So that's basically the recap on the NVIDIA trade for the most part. I guess now let's kind of look at what news has come out and what it can push. What does it mean for new stuff? So that whole Google $40 billion investment into Texas data, that's going to probably be the first thing tomorrow morning, if I'm being honest. So if I go to my B-Spec point of view, that data and compute, let's get to it. Like Iron might honestly be already up 7% into 50 again. You know, like at this point, low key, I need to probably delete these levels because we're just so insanely ahead this price at this point. Like, but Iron, which I think is actually headquartered in Texas. Nope, they're headquartered in Australia. I was wrong. Okay. Like I'm trying to figure out who's gonna develop, who's gonna actually benefit from this. Let's just zoom out real quick. The company that's currently winning in AI, Palantir, like the end user case, Google, they're quite literally saying, hey, we need more compute with this headline of the investment of this whole 40 billion. Let's see what Perplexity has to say about it. Let's see what Perplexity has to say about it. Cool. Texas, multi-state level. Google announced $40 billion investments to construct 3 new data centers in Texas, specifically in Armstrong and Haskell counties, representing the largest ever state commitment in the U.S. plan. Sundar Pichai, alongside Texas Governor Greg, is aimed to rapidly expanding Google's infrastructure to support artificial intelligence advancement, boost cloud computing capacity through 2027. These are capex spends that's looking to push that. So, like, the question is, like, who's going to build it? And if you ask me, looks like Iron, right? Like, Iron's already in Texas. Sweetwater, I don't even know. Some of these pieces are under construction. 200 megawatts, 2,000 megawatts is under construction in Sweetwater. Another 650 megawatts is operational in Childress. Another 100 megawatts is under construction there. And they also have like some smaller stations. There's 50, 80, and 30 operational data centers in, I think that's Canada, right? Yeah, that's because that's Washington State, so that's already Canada. Yeah. So if you ask me, Iron's definitely positioned to benefit from this. And it's going to definitely I could definitely see a way how Iron does come out as the person who's partnering with Google to provide this. They are huge factors in this AI compute and power story right now. And Texas seems to be ultimately the place with enough space to also get this job done. There's other companies as well that could potentially be it. You know, like maybe Cypher Mining finds its way to being, you know, one of the people who are also, you know, benefiting from this. Let's see. Yeah, they're super positioned in Texas as well. Shoot, maybe Cypher's the one. Texas seems to be the main place where a lot of these, wow, they're telling you everything. Okay, so this one's Q2 2027 already. 70 megawatts is what it's planned to do. Singleton, Texas, this is talking about 2028, and that's 500 megawatts. 500 megawatts, 2028, 100-acre plot, right? And then these are, I believe, these are probably operational spots right now. Odessa, Texas, 207 megawatts. Another one that's looking like it's probably still under capacity or under construction in some way, shape, or form. Or right now it's at half capacity, like this one's seems like a bit of a smaller one. There's maybe one of their Bitcoin mining farms that they like have transitioned off to. This one is talking about 500 megawatts. Like, these are going to be huge, like huge full-on pieces of development. Like, geez. So I mean, I think just off the news, these two names are going to most definitely rip. And we'll probably figure out where the bottom is on this in a way as well. Like I think this grouping right here is really interesting in a way to help potentially find where this local bottom sits right now, at least for the time being. Let's see. Yeah, this local bottom, where the double top starts to possibly become a double bottom, and we see something like this maybe, where the name, like, we end up holding this, and we push back up into the 50s, 60s over that news with Google, maybe, or even some other hyperscalers that are looking to put in some things. Now, in terms of who's winning, I think Meta's earnings came out pretty weak. That's why the market sold it off terribly. Also, the AI plan also questionable, but I did see a ton of sweeps with large amounts of cash where they're looking to, people are looking to buy this dip in Meta and say, hey, like I got this one, a January 16 700 strike call for 1.3 million. Another January 16 700 call at 1.35. Like tons of money getting kind of put into this. Even more recently, January 850 calls at 4.3 million, right? Those are all flow orders that are going to be really interesting to see the overall change in the open interest on that, just to see if those guys are really holding that, if they were just trading that for the day, maybe. That's going to be something super important to see. I'm also seeing January 21st, 850 strike, 4.3. The 4.31 million, and also some smaller ones like 122K, 45K, bits and pieces here. That's gonna be pretty interesting. So that EOSC, oh my days, man. I think we talked about this one last week. It did so well, pushed into PT2 and just collapsed because the market couldn't hold it. These high beta names, super correlated with the markets, like super correlated, because when you think about it like this company, pre-revenue, basically. Well, not pre-revenue, but like baby revenue, maybe is a better word. Negative 4,000% net margins, right? Like people who are saying, looking at their portfolio and saying like, oh, market's not doing too well. I want to shed some things. They're saying like, well, I could probably shed this before I shed NVIDIA, before I shed some other, like the Amazons, before I shed like my more long-standing awesome holdings, right? And I think this whole thing with the Sam Altman comment about the 13 billion revenue and the multiple hundred billion in purchasing commitments and expense commitments, and then the whole, oh, we're gonna need to use the governmental like government bailout, that quickly got quelled and nope, not happening. I think it got overblown in a way. The whole Michael Burry going short also kind of got cut. They talked about how it was $900 million short position. It ended up being roughly a $9 million short position. In the grand scheme of things, that's a big difference, right? I think it just got overblown. And then that coupled with some people probably just saying like, hey, I'll trim here instead of next month just so that, I lock in some gains, do some tax loss harvesting, the usual seasonal kind of thing that happens with the markets as well. I think that was a major piece as to what fed to this sell-off. And in the ways, it's easier to trim the ones that are up huge. Like some of these guys have been, people have been sweeping this name since $7, $10. It's easier for them to trim a few hundred shares up here at $17, $20 as compared to somebody else who, who wants to keep the quality, keep it longer. So, I mean, I think all that makes sense to me, at least, right? Like maybe Uklo is finding its way, the air comes out of the Uklo, right? And I'm, again, pre-revenue company. Were they worth $190 a share? Definitely not, bro. Like, what? That was insane run up. But in the future, they could be. Right? In the future, they could, if it's really going to be that huge in terms of power and what ends up going on in this whole case and how much power we're short right now. Like, where is it? Do I have the chart of how much we're short power right now? I wish I had this. I need to get a little better with breaking off my data just so I can find it for you all. So that's why I started the other full-on management of things. Just try and search power, see what I can find. Actually, this is another great thing to look at. I like this. Like, look at this. Mentions of power surged this earnings season. Power or electricity or energy. This is from Wells Fargo. Look at this. This is everybody's concern. Everybody's concern. So, of course, UCLO was going to bonkers. Bloom Energy, bonkers. Right? They're another name that's directly tied to this AI scenario. Like, huge. So, I mean, that's kind of it in a way. Like, I think at this point you got to see what happens in the markets, man. Like, we see a little bit higher, but 3 more basis points. Gold definitely retraced. See, they're flat. You see, like, that's what I'm saying. Like, the 30, 20, 15 basis points really means nothing. Gaps, when you see those huge move gaps, those are better ones. Those are the more like, all right, this is important. So in terms of what to look for, right now, we just saw the flush. Is the flush done? We don't know. Right? Are certain names going to... And also, we've been seeing the cyclical move. Now, if we look at the sectors real quick, the cyclical move. Look at energy. Look at energy. Is energy's going to probably break its way into a bull cycle soon? Like, come on. You can't tell. Wow. Actually, wow. The XLE ETF, wow. This looks beautiful. Like, what? This thing may very well be in 110s by the time we blink. You know what I mean? Like, maybe we start to battle around 97, come back, battle at 100, come back, push down a little bit lower, battle right here, and then we, like, boom. Wow. The sectorals, financials, sickening work. I really like this play. It didn't fully follow my rules. It got back to the base and then said, never mind. Like, but I was really looking for a big wick out and to push into financials. That didn't really happen. Right? Like miscellaneous tech, that not too good. Healthcare, not necessarily bad as well. Healthcare is moving well. Like, are people positioning risk off right now? Like, let's look at this. Let's look at utilities, new highs basically, or pushing into new highs soon. Discretionary starting to come back. Staples maybe found a little base here, right? Like, that's another thing to look at. The focal list that I have a ratio that I like to look at, discretionaries versus staples. Like, once they start to reverse, like, people like to be risk on. I mean, people risk on, the discretionaries go up as higher than the staples, and then vice versa. When things are risk off and people are a little scared, the staples take a better movement in this case. And if you ask me, like, that with biotech, energy, and health, they all seem to be moving pretty well. So this may be the trade of the year 2026. Trading the energy cycle, XLE ETF. Like, actually, I may want to price out a trade right now to see what that looks like. Like, what defined risk can we put in right now to be able to carry us through, like, next year, 2026? I don't really have nothing to price it right now with because I have my phone up there. Let me see. But, like, maybe looking for 2027 positioning into energy. So I'm going to probably continue to read some more reports, see what's going on liquidity-wise. But honestly, I may very well just say, shoot, it doesn't matter what you get. just go ahead and buy the 100 strike for January of next year and just let it ride. Or buy some spot shares and just let it ride. Like that would be the basic math for me right now. You know? But that's pretty much it. PT, right? 105, 105 PT. Cool. And a longer term one. Keep the January joints for some other cool stuff. Let's see if we get to 115. Right? Go from there. Sounds good to me, y'all. But hey, that's pretty much it for me this afternoon, this evening. I hope you guys, continue to define your risk, continue to protect yourself, protect your capital. It's what you need. Don't go out here. Please, I beg of you, do not play with these same week DT, zero DT option stuff and buying and selling quickly and all sorts of jazz. Like, it's much better ways to utilize your capital. And again, if you want to join the WAP, where I'm sharing interest of bits and pieces here, I'll probably do a quick write-up on XLE and a deeper dive write-up as well on XLE. So that's pretty much it for me. I'm going to journal, do some more thinking, do some more planning as well for the 2026 positionings. I want to come to you all next week with some more ideas as well. So we'll see what ends up happening from the markets, really. If markets are in this upcoming week going to be really receptive to what happens, or we get to see a little calm down in all the movement and all the locomotion stuff that's going on. Make sure you take time to meditate, ruminate on your ideas, sit on them. But like Stan Druckenmiller says, invest first, investigate later in a way. So maybe if you have a position in mind, you're going to put $1,000 on it. Maybe you don't put the $1,000 on it immediately, right? But you can invest first, put 200, put 300 on it, just so that you're in the game, so you can see how things are moving, and then you can continue to investigate in the back end later. You probably get some dips along the way, put another 200 in it, or be able to put your full 1,000 in a position, whatever the case may be. But just make sure you define your risk. Never risk more than you're willing to lose, please. And again, none of this is financial advice in any way, shape, or form. I just would like to share this information with you all. Just my thoughts. My thoughts mean absolutely nothing in this market. I am the smallest of small fries in this market for real. And just sharing a few of my thoughts from somebody who's been trading now for north like 7-8 years, basically. So that's pretty much it for me. Agent out, guys. Until next time.